Yeah. Okay, I'm ready.
Hi, this is Wendy Carson Smith with LTNN. Let's Talk Nursing Now, our social media platform for and about nurses. Today, I have Glen Jackson and Joseph Davis from Living Capital to talk with you about your specific needs related to your finances. Glen and Joe are going to talk with you about some things that are especially specific to your financing and being a nurse. They are my friends like everybody else that I bring on, and I love them dearly. Joseph is president of Living Capital Group. He is an independent registered rep and investment advisor representative providing fee-based financial planning, investment counseling, and asset management. His background is insurance, investments, financial planning with specialties in retirement planning and executive compensation. Glen, Joe's partner, is also an independent registered rep and investment advisor. His background is also in investments, insurance, and financial planning. They will be with us for a series of fireside chats about issues related to your finances. Should you have questions or wish to submit them, you can submit them directly to LTNN, or you can reach out to Joe Davis, JL Davis at livingcapital.com. JL Davis at livingcapital.com. If you like this message, please give us a like or a share. And above all, share our information and this podcast with your nurse friends. I think there are very few people who will take the time to structure a discussion about finances just around your work. Joe and Glen, good afternoon.
Good afternoon, Winnie.
Okay, Joe, unmute. Unmute Joe. And okay. All right, that's okay. And today we're going to talk about exactly how much money do nurses make and how's the best way for them to think long-term about the fact that they're making so much money out here in the universe and they need to plan their finances.
You know, Wendy, that's an excellent question to start with. And Joe, I'm going to go ahead and start, and I'm going to defer to the president for the higher level conversation. But it's amazing how much money a nurse makes over their lifetime. A nurse actually makes more money than the average American by a significant dollar amount. But, you know, in order for us to tell you how much a nurse makes, I need to get you some tools. So what we're going to do today is we're going to walk through our website, livingcapital.com, and we're going to show you how you personally can calculate how much money you have made. So what I'm going to do is I'm going to share my screen, and I'm going to show you, first of all, the livingcapital.com website has a wealth of information, but run on over here to where it says Insights. That's where we're going to get some good insight today. And we're going to click on Retirement for the purpose of this discussion. There's some really nice videos. Don't be distracted. Jump right down here to where it says Calculators. When you click on Calculators, Wendy, this is amazing. Watch what this calculator does. I'm going to click on All Calculators, and you can click on Lifetime Earnings. Now, I'm not going to show my age because I'm much more younger than I appear. But for example, if I were a nurse and I was 35 years old, I can go in and I can assume that I'm going to work until age 65. Is that when they normally retire, Wendy, or do they work longer or shorter than 65?
No, they retire around age 65.
Okay, so I got it right. From what our discussion was earlier before this recording, nurses begin right around $47,000 a year, which is severely underpaid. All of you need a raise. So if you elect Joe Davis president, he will put some legislation in to get a raise for every nurse, and it'll come out of the attorney's pocket. Little shot to you there, Wendy. But I'm going to do what an average nurse earns over a lifetime. It's somewhere in the neighborhood of $80,000 a year, something like that. I'll put him at 82 because your earning potential is an additional $56,000 in your career, which is just ridiculous money. And I'm going to put you at a 3% raise, not quite a 5% raise. And when I hit calculate, look what this does. This actually gives you a graph of your lifetime earnings. Let's click on the details and let's be amazed. So beginning at age 35, we're going to give you raises, and look what happens by the time you are 65. You have earned $3.9 million. Let me enlarge that. I'm going to enlarge that. $3.9 million over your lifetime for the average nurse. Now, if you think about it, let's just say you're in your 50s or your 60s, you know you've probably already run through over $2 million. Where does that money go? Joe, what happens to people when they make that kind of money and don't have anything to show for it? What have they done with that money?
Well, it usually is consumed. It's spent. And if it's not saved, especially if it isn't saved in a retirement plan, which gives you some leverage because you can save it without paying tax, and then you can grow it inside your retirement plan also without paying tax. So you can get a significant amount of growth, which could make up for some of the money that you spend as long as you save enough along the way. So we're not saying you can't spend your money, but if you save enough, let's say you moved your savings up to 10 or 15% a year, and then you could spend 85% of what you make, and you would still wind up with more than $1 million at retirement.
Now, Joe, you've been doing this for over 40 years, and I'm barely over 40.
Yeah, watch yourself now.
Yeah, if a decade is barely, then I'm barely over 40. But you know, Joe, you said something to me earlier today when we talked about this, about retiring with dignity. Can you expatiate on what that means and what you've experienced over your career with people who've not planned for retirement?
Well, it's very simple. Retiring with dignity simply means that your income in retirement, that means after you stop working, has to be elastic enough to keep pace with inflation. Because if you're not keeping up with inflation in retirement, your standard of living will be declining. And a declining standard of living does not make you feel good because you're not going to go back to work to make up for it. So you have to place your funds in a place where they can grow to beat inflation as well as being protected. So don't make the mistake of thinking that you have to get all conservative and put your money in bonds or money market funds when you approach retirement, because we all know what happened in 2008. Stocks went way down, but bonds didn't. The problem is bonds don't grow over time. And if they don't grow after you retire, your standard of living is going to decline. That's why we say we want to keep your dignity in retirement, means you can buy what you need. Because everything that you and I consume today is going to cost more next year. That makes sense?
Boy,
Makes
isn't that
good
the
sense.
truth? Yeah. Now, Wendy, you wanted us to talk about how to plan in this environment, right? Like for
Yes.
home ownership and having children. Well, we're not actually going to teach you how to plan on how to have children. There's another professional that does that part. But we're talking about financing the child's life as well as their education. And Wendy,
Exactly.
here's what's perfect. If you look at this and if you put your personal information in and you're watching this, you can see how much you've earned over the course of a lifetime. By the time you have children, you can see how much money you've gone through. You can then begin to figure out, here's how much house I can afford. Here's how much retirement I can afford. Because if you know how much money, for example, if you know by the time you're 45, you will have made $1 million, you should be thinking about what could I have done during those stages. Now, if you're young like me, like 35, you could actually plan this out as you go, which is amazing. Now, but I do want to highlight this. Notice the older you get, the more money you've made and the less opportunity you have. One of the things that Joe emphasizes when he talks to people is if a person has a lot of money accumulated and they've not planned it out, that's the person that actually would need help the most. For those of you who are younger, who haven't made any mistakes, we're going to walk you through how to do some calculators. You can get out of this without getting scathed. But Joe, can you address those who may be 50, 60 years old, who've saved up a good amount and don't really know where to go from there?
Well, that's a good point, Glenn, because I think we can all look back to 2008, where the markets just cratered. I mean, if you had money in stocks, you lost 30, 40% of the value in 1 year. And if you were not properly planning your portfolio so that it would be balanced enough, or if you made the cardinal mistake, the mistake you should never make is when your equity values go down, you switch them out into a money market fund or a bond fund. It's the kiss of death. Because if you leave your equities alone, in 2008, you were back to normal within 4.5 to 5 years. But if you switched your money out in 2008 and you didn't get back in the market, you missed a 400% growth, which would have given you all your money back, but you were on the sidelines. So this is one of the values of having a good financial advisor. If we just keep you from making that one critical mistake, which a lot of people do. People were walking around saying, my 401k is looking like a 201k. You remember that joke?
Yep.
I mean, the values were so far down, but if you kind of got back at the market by switching your money to a safer place, you really missed out on the growth. So you have to distinguish between two things. You have to know what a loss is, and you have to know what a temporary fluctuation in value is. A temporary fluctuation in value is when your account balances go down and come back up. A loss is when your account values go down and you sell them and you move to a money market fund. And the difference between a loss and a temporary fluctuation in value is a lot of money, a lot of money. And if you miss that money, it's too late to make it up by earning because you're headed toward retirement. And if any of you on this call knew anybody who was planning to retire in 2008 and didn't have protection for the values in their accounts by using strategies which would prevent the loss of those values, then what were their choices? Did they keep on working, or did they retire with a lot less money than they should have had? And here's where good advice will help you. If you avoid that one fatal mistake, because you're listening to an advisor that says, look, if you have a diversified portfolio, in other words, you own lots of different companies in your retirement plans, they're not all going to fail. They may go down, but most of them will come back. And if you lose a few of them, so what? If you have hundreds or thousands of companies in your plan, you'll still be okay.
Okay. Well, this is the first segment of us having Living Capital with us to advise us. Next time, we'll have them come in and have other discussions with us that are specifically structured to address your finances related to your career. If you like this, please share. Hit the like or share on the buttons. Yeah, like or share. And above all, let your friends know about this. This is a unique opportunity for you to have the opportunity to sit and have someone talk with you about what it is with your career that you might want to address related to your finances. We are on, LTNN is on Facebook, YouTube, Blog Talk Radio, Apple Podcasts, Instagram, and Twitter. So you can get to us at any time. If you have a question or you'd like to know more about the types of software that Living Capital has on their website, you can go to their website at www.livingcapital.com, or you can send an email to joe@jldavis@livingcapital.com. Again, thank you, Joseph Davis. Thank you, Glen Jackson, for joining us. I think this will be an exciting series, and I am sure that as I learn, the nurses will learn as well. And I'm sure we'll hear from them about how wonderful this is and about the opportunity to actually have someone seriously think about their finances.
I'd just
Thank
like
you
to add
again.
at the end, we thank all of you for what you do. You really make a difference in the lives of people. Your service to humanity is noble. And Glenn and I want to take good care of you.
Exactly. Thank you again and have a great day.